Okay, this is something that I've been wanting to make here for you guys to show you exactly what's going on with this whole. If you have a higher interest, if you have a higher credit score, you pay a higher rate now, right? So on the left here is the let's see here is is the one that we're operating under now. And again, these are not interest rates; these are basis points basically used to price into the loan. It's the pricing on the backside. So basically this has already been built into all the loans that are going to close after May 1st because we knew this was coming. I didn't know it was coming, but I'm not that smart, but some people did. And um, so it's been built into your interest rates already. So at the end of the day, and I'm going to get to all that, if you have a really, really good credit score, you're probably paying an eighth of a higher rate now than you would have after that. So an eighth of a rate, instead of 7%, you're paying 7.125. Instead of 6.5, you're paying 6.625 of a rate because of this. I like explaining this though, because every day I get, what is your rate? Well, then I always say, what's your credit score? What's your loan to value? What's your debt to income ratio? And they're like, well, I don't want to have my credit pulled. And I always say, hey, you're allowed by law to shop for a mortgage. You've had your credit pulled within, I think it's 30 days of another lender because you're sitting there and you fell for the Quicken Loans TV commercial, and then they don't answer you, or they tell you everything's good, but they never ask for a bank statement or a pay stub, whatever. Anyway, so I want to explain this. So on the left side over here is the one we're operating under currently until May 1st. And this is your credit score on the left side over here. And then these are your down payments. So this would be less than 5% down. This would be 5 to 10% down. You get it. This would be 10 to 15% down. This would be 15 to 19.9% down. This would be your 20% down range. Okay, let's say your credit score is 680 to 699. Okay, and you have 20% down. You have added about 175 basis points to your pricing of your loan. Okay, so now this is under the current one, and then let's look at this one over here. So 1.75. Now we got to go, I said 680 to 699, right? And 80% down. Okay, so now you're only paying 1.125. Okay, so there is, a little better. But if you look at the credit score up here, let's say you're a 740 or higher, and you have 20% down, you're paying 50 basis points. Now, 740, 759. Sorry, right there. Now you're you're paying 0.875 instead of 0.50. Okay, and that's why I asked the experts, like, what does this equate to? They said it's about an eighth on the rate. Again, this is not exact science. I'm trying to explain this because the news has it all jacked up and trying to scare people. So this is not, I'm not a fan of politics, period. And but this is not the Biden administration. This is FHFA, which stands for Federal Housing Finance Agency, which oversees Fannie and Freddie. This started back during the Clinton years when everybody's supposed to own a home, right? Back then, they were doing crazy stuff. It was undocumented W-2s and pay stubs, and anybody got a house back then. And that did cause a recession. There's not going to be a housing recession. Our industry is so regulated now, which it needs to be. This is the most expensive thing that you do is buy a house. But that's the whole idea behind it. I really, really wanted to break this down in English. So again, this would have been, what we're operating now. You have a credit score less than 620, and that would be like an FHA or a manual underwrite on a USDA or something like that. You're paying 375 extra basis points because your credit is lower. You're getting really whacked on that. But hey, you can still buy a house, and we can always refinance you later, because once you own a home and you make on-time payments, your credit's going to go up. Now, that same person with a less than 640 credit score is only 175 basis points. So they've really made it a lot easier, a lot less. Yeah, not easier. They're going to make it less. What's the word I'm looking for? They're not killing you anymore as much as they were if your credit score is lower. And they're blaming it ultimately on, not blaming it, but saying like, we're really penalizing people with lower scores, and the numbers are there that they really don't. We're not seeing all these foreclosures that we thought with people with lower credit scores. So, and then they were saying we're giving too much credit to the people with the higher credit scores. And I will, if you want me to send this to you, reach out to me. But this is the rates from the FHFA. I talked about that a little bit ago, right from their thing here. This is their press release they put out yesterday. So I'm going to put this video everywhere. If anybody has questions, get a hold of me. I work for USA Mortgage. We can do loans in every state but New York. Sorry, New York. I guess we just don't like you. FHA, VA, USDA, conventional. just even if, and I don't have all the answers, but I will find the answer for you. So call me anytime, 608-604-5068, or email me, Schultz Mortgage Team at usa-mortgage.com. Have a great day.